What is up, everybody? Welcome back to Bitcoin and Markets. I'm having some connection issues on my side right off the bat. Let's see if that clears up. But welcome back to the show, Bitcoin and Markets. Today is Wednesday, October 30th, 2024, one day before Halloween and White Paper Day. So happy White Paper Day out there, everybody. I live stream here Monday, Wednesday, Friday. Usually have a big newsletter comes out on Monday. You can find all the stuff I do by going to bitcoinandmarkets.com or by checking out the website on Twitter at Ansel Lindner. And I'm sorry, I'm bringing up this website right now. If I can find it, Jesus, where is it? I did just put out another post today, or I actually revamped this older post. So this is an older post about understanding the interest rate fallacy. I put out a video for that. It's pretty good. I think it's mandatory reading for everybody because it teaches you about something that most people don't quite understand. It's counterintuitive because it's been drilled into us. And I say that right here. This thing has been drilled into us by economists in academia and at the Federal Reserve, a belief that low rates lead people to borrow more and expand credit. But that's exactly the opposite of what the interest rate fallacy tells us. So check that out. Check out that video and the website. Like I said, all my stuff comes out here. I have premium content that comes out on the website. Yesterday, put out a premium post where I cover what's going on with the 10-year Treasury. The yield is going higher, and a lot of people are saying that is showing that there's inflation coming. But why aren't shorter rates also going up? And so I dive into that and I look at that from a unique macro thesis perspective that I've developed over the years here on Bitcoin and Markets. Also taking a look at the Bitcoin breakout and give my forecast for near term, medium term, and long term. And lastly, let's go into this one real quick. This is the report from Monday. And I have specials going on to celebrate the White Paper Day. You get 50% off the professional tier or the member tier, your pick, but that is going for a limited time. So check that out. Okay, what else should we talk about here before we go into some of the big Bitcoin making big headlines? Of course, going near all-time high against the US dollar, already an all-time high against many other currencies, including the Canadian dollar and the euro. So we're going to take a look at some things that people have been saying in the media, very powerful individuals saying, these CEOs of large, investment firms, people going onto YouTube, Yahoo Finance. Oh my gosh, why couldn't I find that word? Yahoo Finance and talking about Bitcoin going over $100,000. So, but before we get there, let's check out this thing. If you guys have not voted, friend of the show CK has been sending people over here. This is the Anthem Awards, and the Human Rights Foundation is up for this Anthem Award. If you scroll down here, you can vote for them right here. So if you haven't voted for this, check out the CBDC tracker by the Human Rights Foundation. It's a great product, very valuable for the industry and the world in general to know what's going on everywhere with pilot programs, who's launched things, how those launches have gone, things like that. So check that out. They're at second place. You can see 22% of the vote. And this other one up here, Home for Good, is at 24%. But check this out and vote for the CBDC tracker. Okay, now let's get into the main subject of this show, and that's going to be Howard Lutnick going on Pomp, talking about Bitcoin. And, Pompliano, love him or hate him, he is kind of a altcoin pusher, promoter, scammer in his own little way. I'm going to watch this and play this so you guys don't have to go and give him the views. But Howard Lutnick is a very important individual. He's CEO of Cantor Fitzgerald, the treasury banker for Tether. Also, he's like co-chair or co-lead of Trump's future transition team. So that is a very big deal when we're talking about what he thinks about Bitcoin, what is actual, like, watch what they do, not what they say, what his actual portfolio is and his exposure to Bitcoin. So we're going to take a look at that. So this section is what we want to go to, and I'm going to go directly to 1 hour, 1 minute and pull this up right after the ad. Okay. I'm going to also make sure my levels are up on this. Okay, and play.
But we get to the same outcome.
Okay.
Okay. So let's think about it differently. So people use Bitcoin and they say it's like a currency. It's not.
I don't think it is.
It is not a currency. It is a commodity, like gold, like oil, right? We don't know how much, but in the end, that's why they call it mining. It's not like that funny, actually, right? And they have a gas fee, right? Like
Okay, just right up front here. Yes, Bitcoin is a commodity. Gold is a commodity, but money is what we're talking about. And he does kind of dance around this idea that currency is the wrong word for it. Satoshi never used the word cryptocurrency until way later, after other people, I think, had used it first. But it doesn't really quite fit because a currency is a denomination of a money. So think about a gold standard. You have the money is gold, and then you have currency on top of that, which would be $20 per ounce. Okay, so the currency is a denomination on top. So Bitcoin doesn't really fit into the definition of currency. It does fit into the definition of money or commodity. So I totally agree with that. Another thing, when you're thinking about commodity-based money, why wouldn't any commodity work? So we have things like the BRICS always talking about, hey, we're going to launch this oil-based currency. Okay, we're going to back this currency by oil. And there's been talk like the petrodollar. Okay, that even though the petrodollar is kind of a fable that was created over the years, didn't really exist, but people have talked about this idea for a long time. But why doesn't that work? Well, good money is not consumed because money is an indirect good. It is not a direct good that you consume. It's not good if it is consumed because then you would, that's a different use case for it. Just like in industrial uses and things like that, that is actually a bad thing for any sort of money. So if oil market is like $2 trillion, but every year out of that $2 trillion, almost all of it is burned, consumed. Okay, that's not a good money. So anybody that says, hey, we're going to make an oil-backed currency, just kind of laugh at that because that's not what makes a good currency. You want to be able to hold something long-term. It's never consumed. It always holds its value and goes from person to person to person. And there is no alternative use case for it. The use case is simply money, store of value and medium of exchange. So that's what I would say up front.
The words that everybody uses with respect to Bitcoin are really commodity based. So it should be regulated like a commodity because it is a commodity. And Bitcoin, and let's only talk about Bitcoin, right? It's a commodity, right? Commodities, you can sell oil to anybody you want, anytime you want without regulatory anything. If you want to do an oil futures contract, okay, fine. But if I just have oil come out of my, or out of my, I have a drill, an oil well in Texas and I want to sell my oil, the government just do it clean and that kind of stuff. But I could sell oil. I can mine gold and sell gold.
Yeah, you can go panhandling for gold, right? Is that what it's called? When you go to the river and you just use your pan and you can get gold and then sell it. And there's no regulations on that. That's how Bitcoin should be. It should be peer-to-peer, unregulated, just like any other commodity, especially like
I should be able to mine Bitcoin and sell Bitcoin. To who? Anyone. Anyone where? Anyone ever. It's just a commodity. So if everyone started talking about Bitcoin being a commodity, they would actually be talking about the freedom of Bitcoin, and they'd be talking to people, and everybody who's in power would now understand.
I agree with that. Commodity money. Bitcoin is commodity money. Bitcoin is not a currency. It doesn't compete with the dollar. It competes with gold. And the dollar can just be pegged to Bitcoin, just like it was pegged to gold. That's not a popular idea. I know even people in Telegram don't like that idea, but that is most likely the route that things are going to take, because it is a commodity and the dollar is naturally a currency. And so how do those things interact? If you're going to smash together two things, one thing is fundamentally a money and one thing is fundamentally a currency, what happens when you smash those two things together? You get a Bitcoin-backed dollar, a Bitcoin-backed currency. So, but I agree that stop saying cryptocurrency, stop saying crypto in general. That with the next clip we're going to watch is the guy from Bitwise speaking on Yahoo Finance, and they both the interviewer and he were using crypto. I mean, that is the way to bring on the regulators. It's the way to confuse people. And the people that use the term crypto, they're doing it for a specific reason. I mean, maybe not that interviewer, because she is probably ignorant about this topic, but people inside the industry that conflate Bitcoin and crypto, they're doing it for a reason, because the only thing that gives crypto value is its affinity towards Bitcoin, being like Bitcoin. If Bitcoin were to go away, crypto would go away. And we're seeing that. I mean, the altcoin bubble is dying. Okay, the altcoins, this is a very, very bad cycle for them. They're hitting multi-month lows when Bitcoin's breaking out, and there's nothing to save them. There's no YOLO money left from 2020 and 2021. People are scrimping and saving, tightening their belt. They're having a hard time making ends meet. Do you think they have time to YOLO into poopy coin? No, they don't. Okay, the people that are investing in this cycle are these people, the Howard Lutnicks, that have strategic interests, and the strategic interest is Bitcoin. That is the answer, not poopy coin.
Because when they think, oh, it's going to replace the dollar the way you talked about it, you know.
I don't think it's going to replace the dollar. Actually, this is something I've changed my mind on over the last 3 or 4 years. Is early on, I think people looked at it as Bitcoin has to be successful, the dollar will suffer. What we've seen, which was not really a thing 5 years ago, is that actually Bitcoin continues to grow in value. $1 trillion plus dollar asset now, but stable coins have also grown in value. And so now what you're starting to
No, stablecoins have not grown in value. They're stable in value. That's like by definition what they are, Mr. Pompliano. So no, the market cap of the network, like the total circulating supply of stablecoins, has grown, but not the value. They have not grown in value. I'm sure that was a slip of the tongue, but that's just wrong to say that. They have grown in, what else would you say, like attention. They've grown in popularity, things of that nature, but not grown in value. And that's very important. They're not an alternative for Bitcoin. They're an alternative for the dollar.
see is the framework that I use is that Bitcoin is like your digital savings account. You put your money in there, you don't touch it, right? It's like gold. You buy it and you hold it. The whole point is not to spend it. You're disincentivized in America. You get taxed if you spend it right now, and you're giving up future appreciation. So it is that commodity. You sit there and you just hold it.
It's
stable coins are like your checking account.
Okay. Stable coins are your checking account. They're not like your checking account, right? So in America, I have my money in JP Morgan. Mm-hmm. Okay. And I have a Bank of America. I have Bank of America and JP Morgan. I have checking accounts. They don't pay me interest.
Yep.
Okay. And I Venmo you. I can PayPal you. I can write a check to you, right? I can use my credit card. I have dollars in my pocket. Who cares? Dollars are our fiat currency. Mm-hmm. Okay. Snap my fingers. You and I would transport to Argentina. Now I look in my pocket, I have Argentinian pesos. My savings account's in pesos. The only bank account I can have is in pesos. pesos going down only 70% last year. We're screwed. I can't have a savings account. I need to get out. What do I want? I want a checking account in dollars. I go to the bank, say, can I have a checking account in dollars, please? No. There's no currency in the whole wide world that's allowed to operate in someone else's country. They do their own. So you go to Britain, they do the pound. You go to the euro, right? All the European countries, they only have the euro. So you can't open a dollar-based account in Europe? Of course not. You have to use the euro. So what a stable coin is the dollar checking account, right? Because I can pay you in it $1.62. And I can get that. Like, I don't need to get a currency, swap the currency, give it to you, try to get change, try to get the dollar. I can just pay you in it. So it's a dollar-based checking account. It's the digital dollar all over the world. So,
okay. So I really dislike this framing. Bitcoin as a savings account and stablecoins as a checking account. It doesn't make any sense. Just stick with the dollar currency analogy, in my opinion. Bitcoin is the money and the dollar is the currency. I mean, what happens to Tether when it becomes pegged to the dollar, or sorry, to Bitcoin? What happens to Tether when the dollar gets pegged to Bitcoin? That's the framing that you have to take when you think of that, about this. But I do agree with the kind of explanation that he used. So I disagree with the semantics and the labeling, but I agree with the example he used, where stablecoins, specifically dollar Tether, are an attack on other currencies like the euro, like the Argentine peso, like the Turkish lira, like the Japanese yen or the pound, whatever. That is an attack. 100% that is. And it's $100 billion attack right now, 120 billion, whatever the circulating supply of Tether is. So I 100% agree with that. And that is why the ECB is so big on CBDCs. That's why all the other ones are so big on CBDCs, because nobody wants a digital euro. They want a digital dollar. And people are worried about dollar losing status, global reserve currency status, to something else. I mean, yes, it will lose it, like, kind of conceptually, to gold and Bitcoin as we move over to a commodity-based money again. But it's not going to lose to the euro. It's not going to lose to the yuan. It's not going to lose to the yen. All right. So these countries, I mean, they've tried it. There is such a thing as Tether Euro. And let's go. It's been going for a long time. So you can find out the exact circulating supply if you go to tether.to, share this tab, and let's go into transparency. Okay, so we have Tether dollars, 120 billion in circulation, and Tether Euro, which is years and years old. I mean, it's not quite as old as dollar Tether, but it's only at 25 million euros. Nobody wants this garbage. Okay, that is the free market right there. Right there. Why isn't there more Euro Tether if we're talking stable coins here? Because no one wants it. That is why ECB is pushing for CBDC. Okay, the Mexican peso Tether has 19 million pesos, so that's not nearly as much. I thought this would actually grow faster. They have 246,000 ounces of gold Tether, but I think that doesn't come out to be even $1 billion. I don't know. I saw some conversions on that. Let's see, what would it be? 3,000. Yeah, no, yeah, it doesn't come out to even $1 billion in gold Tether. So this is the winner. Love it or hate it, this is the winner. And that's the framing that I like about his answer here. I dislike the labels. It's not a checking account, it's currency. and Bitcoin is money. But okay, now let's go to the end of this interview. It's going to be at 2 hours and 37 seconds. There is a good life story here.
Sorry,
He tells
Grandma, I
his
forgot how to
life
properly do
story.
CPR on you because you should.
This is an ad. He tells his life story, and so it is kind of an interesting interview. So go give Pomp a view if you want to. But let's get into this last part. He's going to ask him one more time about Bitcoin, and here we go. Actually, before I do that, I wanted to check comments. What's up, John Delaney? About the Lutnick comment, sounds like they are trying to convince us that there is value in rare numbers. That is false. The value is in the ability to transact without censorship. Yes, the whole point of Bitcoin was to get rid of trusted third parties, right? That's all over the white paper. That is a happy white paper day tomorrow. That is why Bitcoin was invented, to get rid of trusted third parties and censorship. But to do that, you needed decentralization, right? And for decentralization to work, you needed a proof of work to keep decentralized consensus. And for proof of work to work, you needed a native token. So it's all connected. It's circularly connected, right? So what do you transact? You transact that native token. So you start with getting rid of trusted third parties. To do that, you need decentralization. To get decentralization, you need proof of work. To incentivize proof of work, you need a token, a native token. And what is transacted? That token is transacted without trusted third parties. So it's circular, it's complete, it's unbreakable. You can't take one part out of that, like going back 8 years and it's all blockchain, all the things, right? Well, you know, that's silly, because what they did was they took one piece out of the circle, the holistic oneness that is Bitcoin. Bitcoin, that, like, if you were to draw Bitcoin, it would be this circle of those things that I mentioned. And so what they did is they tried to take blockchain out of that. And of course, it's not going to work because it's not built like that. A blockchain needs a reason to exist. Well, what is that reason? Decentralization, censorship resistance. To get that, you need a token, and you go back around the other way, right? So you can't just take one thing out. So yeah, good observation there, Delaney. Tomek, what's going on? Bitcoin to infinity. Is he talking? I hope you guys could hear that. Test. Put in the chat if I am going out. Uh-oh, this is not good. I'm unmuted on Telegram. Let's see if maybe Telegram is yelling at me saying, hey, you're muted. Well, I hope that was coming through. But anyway, okay, let's continue on with this and put in the chat, guys, John Delaney or Tomek, put in there if I'm coming through just fine. Let's listen to these closing statements.
I have one last question for you before I let you go. How rich are you, and how much of your net worth is in Bitcoin? Because if I don't ask you, everyone will be really mad at me.
It's a very, very rude question, by the way, but okay. So DT says he can hear on Telegram. All right. Just a troll trying to get me freaking out, and it worked. Okay, let's go.
If you took my stake in my public companies, which is public, and you did the public math, you'd see a couple of $1 billion.
Okay.
Okay. And then at least a couple of $1 billion. And then you'd have, what's Cantor worth? Yeah, I'm not saying. Okay. But things are good for me. How about that? Is that a nice way to say it? Since Cantor owns the stakes in the other companies, it's good for me. So, and I have
the percentage. You don't have to say exact number, but like, how do you think about either you or Cantor?
I don't have a big enough percentage. I probably have,
Remember, this is the co-chair of Trump's transition.
I can't say, because then people can figure out that money and how much I have. I would say I have hundreds of millions of dollars.
Okay.
Okay. Hundreds and hundreds of millions of dollars. exposure to Bitcoin. And it will be billions.
I was going to say, so next year when you come back and we'll do this again and you'll be a Bitcoin billionaire and,
yeah, but you remember that model I told you. So if every time Bitcoin dips, I'm going to be the buyer. Right?
Trust me, I know why you're doing the lending.
It's all coming. You figured it out.
Listen, you don't have to explain that one around here.
So I got the 50% Bitcoin. I got the Bitcoin lending. But basically, what you're going to see is Cantor Fitzgerald is going to be the sponsor of Bitcoin into traditional finance.
Mm-hmm.
And so we will be the leader of it. And I'll pull out this podcast in years to come and say, see, I told you, because no one's going to remember.
Of course.
Right. But all the banks, after we do it and show people how to do it right, they'll all copy.
Mm-hmm.
And so the asset of Bitcoin will just, as it becomes more accepted, it will become more valuable. And the whole Bitcoin nation should just call it a commodity, never a currency.
Mm-hmm.
Just call it a commodity. Because if it's a currency, you're attacking the politicians of the country,
mm-hmm.
right? You're trying to replace my currency with yours.
Mm-hmm.
But if you say, hey, I'm just oil, I'm just gold,
mm-hmm.
I'm just a commodity, leave me be, right? Then they'll leave you be. And that is true. And it will be why Bitcoin, which is rare and is special, will become ever more rare, as we both know,
mm-hmm.
ever more valuable over time. It'll be financed just like gold is, right? Gold is, it's not like super financeable, but it's financeable. Oil,
mm-hmm.
it's not super financeable,
mm-hmm.
but it's financeable, right? Bitcoin will be financeable. Bitcoin will be way, way, way higher, sometimes lower. You just have to have faith.
Ladies and gentlemen.
All right. So that was a good way to end it. I do agree. Let me get a different picture of him here. So I do agree with not calling it currency specifically. What do you guys think? Put in the comments if you think that they'll leave it alone if we just call it a commodity. One of the best marketing things for Bitcoin right now is digital gold. It is super, super easy to say digital gold and for boomers to understand what digital gold is and people, diversifying their own personal portfolios into Bitcoin, as well as large institutions and large, even sovereign level funds diversifying into digital gold. That makes a lot more sense than to say cryptocurrency. So I agree. Let's kill the term cryptocurrency. Let's even kill the term crypto and just do Bitcoin, Bitcoin, and then scams. I wouldn't even call them shit coins. They're just scams. So let's do that. Okay, let's move on. Let me check the comments one more time. You guys are probably saying, Telegram stream shows the video very choppy. Oh man, sorry about that. I am on the gigabit internet. Funny. You want them to suffer a little bit. This is from, I don't know how to pronounce your name, but I want them to suffer a bit, and I want to replace their currency. Well, they'll be eating a lot of humble pie. Well, one thing I went into with Telegram before on the pregame show with Telegram. By the way, guys, I'm live streaming on YouTube, Rumble, Twitter, and Telegram. If you're watching on Twitter, 106 people, jump over to the YouTube or Rumble and like, comment, subscribe over there. The comment, the chat over there is much easier. I'm also trying to grow the channel to get monetized at 1,000 subscribers. So I would appreciate that. But I go live a few minutes early on Telegram because that's the main community spot. And I was saying, reading a tweet that I put out this morning, and let me just bring it up because I think it's kind of funny, but I don't know if other people will think it's funny. Let me scroll down here and find it. 1 second. All right. Yeah, here we go. So if you're involved in macro, whether a wealth advisor, analyst, trading guru, or whatever, and you missed Bitcoin, you should be humiliated by this point and fired. You have utterly failed. So yeah, people will eat their humble pie when Bitcoin is more fully adopted. It's just kind of a matter of time at this point. Like Cantor or like Howard is saying here, it's just a matter of time before everybody adopts it. But okay, let's go on to the next video. More people talking about Bitcoin. And this one is from Bitwise CEO, and he is on Yahoo Finance. So let's
I think the
rewind
most
to the
important
beginning
thing
here.
for Bitcoin is that the election happens. Regardless of a Trump win or a Harris win, the regulatory setting for Bitcoin is improving. And I think that's what you're seeing reflected in the price. Of course, in the short term, crypto favors a Trump victory over a Harris victory. But really, Bitcoin doesn't need Washington to succeed. Regardless of what happens, institutions are moving into the space, adoption is rising, ETF flows are happening. I think we go higher either way. It just might be a little bit faster under Trump.
Yeah, and when we talk about that, maybe a clarity from a regulation perspective, right? How much of that is necessary in order to continue that momentum, even potentially past 100,000?
Yeah, it's a great question. Look, I think we're going above 100,000 on Bitcoin. I think the regulatory clarity you're talking about actually matters more for the so-called altcoins, for Ethereum on down. Those are more exposed to regulatory risk. So I would expect an altcoin rally, even more so than a Bitcoin rally in the event of a Trump win. But regardless, I think both are moving higher.
Why does it matter as much for Bitcoin?
Yeah, so Bitcoin has more regulatory clarity than Ethereum and other assets. The SEC, the CFTC have already declared it a commodity. It's in the clear. There's already an ETF. BlackRock already has a huge business in that. That's not as true for Solana and Aptos and other altcoins. But I suspect if we get a new SEC, that will become clear, that will drive institutional adoption, and we'll see that rising tide lift all of those boats.
Oh man, I hope not. I freaking hope not, guys. That's what all of these scammers are waiting for. They're waiting for this. But I don't think well, maybe it's going to happen. I mean, Trump did launch all that scammy stuff, which I don't think he's so old. I don't think it's really his idea. It's probably his son's. And okay, they're just playing around with crypto at this point, but as they go forward, they will learn. And everyone, when they kind of come into the space, they think they know best about, oh, Bitcoin isn't fast enough. This other coin is faster. So I'm going to invest a little bit into this one. Bitcoin can't do these quote unquote smart contracts, even though it can. But so I'm going to invest into the smart contract platform, right? So they second guess the market and they go in and buy these other things. They even maybe launch blockchain projects themselves, launch NFTs, or start building some DeFi stuff, whatever the case is. But after a cycle of being in, usually people come around to being Bitcoin only. And that probably will happen with the Trumps. I hope it does. And hopefully that's not too late. Hopefully they don't get an SEC chairman in there that just greenlights everything. I mean, this is a touchy subject in Bitcoin. I mean, if you would have asked me 8 years ago, like, what do I think about the SEC? I'm like, oh yeah, they shouldn't exist. They shouldn't do this. I'm not saying that it's the best way. We probably find a much easier way to do this, a much better way to do this. But I am also against fraud. Okay. Even ANCAPs will say, yeah, they're against force and fraud. There shouldn't be force and fraud. Well, what the heck do you think altcoins are? They're not force, but they are fraud. They're complete frauds, scammers. Somebody's got to protect somebody against fraud. And I mean, shows like this, and we'll go out there and we'll say these are scams. But then you have other people like Pompliano we just watched that pump it, and he has 100 times the viewership. So there's got to be some way to keep this fraud from rolling downhill. It's a very niche topic that not a lot of people do, like that circle that I was explaining earlier. What makes up Bitcoin and why is it holistic? And you can't take one piece out and add another piece in. Most 99% of even people in this space probably could not go through that circle. So do you think a layperson is going to be able to know this? No, absolutely not. They heard somebody like Charles Hoskinson or whatever his name is from Cardano pumping. Sorry, still a little bit under the weather. Pumping Cardano, and he looks like the nerd that is going to be some computer hacker or something. And so they buy in. They put 10,000. They put their life savings into Cardano, and it just gets rugged from them. Right? It's fraud. So I hope that the SEC doesn't come in and allow all of these, scams to blossom. Let 1,000 frauds blossom. I don't care if these frauds go overseas either. Like that would be another argument that people would say, oh, if we don't let it happen here, the innovation is going to go overseas. I don't want fraudulent innovation or innovating on fraud. Like we have Ponzi scheme, pyramid scheme, affinity scam. There's all sorts of these really well-known schemes out there. I don't want we should add in there crypto scheme innovation to be happening because it's all fraud. Okay. Like, do you want people to innovate on Ponzi schemes? Maybe, but whatever. So I don't know. I don't know if this is going to, when Trump gets in, if this is really going to, he said he's going to fire Gensler, but that doesn't necessarily mean he's just going to hire crypto mom, that one Hester Pierce, who would just let everything go. I mean, how do you let some of these crypto scams, like let's just say Cardano or Solana or XRP, Ripple? How would you let Ripple go and then come back and crack down on scams in the physical economy? Okay. The Howey test applies to these scams just the same way they apply to traditional scams. And so if you let these things go, you would lose your enforcement of all scams. You basically let everything go. And okay, maybe I don't think ANCAPs would even support that. So anyway, let's continue listening to this. And they say crypto a lot.
What then do you think is the number one catalyst for Bitcoin as you look ahead to some of your 2025 projections?
Look, I think this is the best single time to invest in Bitcoin from a risk-adjusted perspective. All of the major existential risks of Bitcoin have been washed away. We have an ETF. We have institutions. They are coming into the space. The biggest catalyst is that move of institutional adoption. We're seeing that accelerate. We saw $800 million in ETF flows yesterday alone. This is a tidal wave of institutional assets moving into the space. There's a fixed supply, and from my perspective, that means higher prices.
You're saying it doesn't matter ultimately in the long run who is elected come next week. I'm curious then, because there's been so much talk.
Well, it does 100% matter who gets elected, because Kamala Harris is a global Marxist. She's a Marxist. All of her taglines about, the famous one of about looking to the future, unburdened by what has been. That's like a Marxist slogan, I think, out of Mao's China. Like that's like almost word for word a Maoist slogan. And so these people are Marxists. They will crack down on not only Bitcoin and all of your scams, but they'll crack down on banking. They'll crack down on speech. They'll crack down on everything. So, of course, 100% it matters. I mean, he's trying to be non-political here, but if you want Bitcoin to continue in a growth fashion like this, you have to vote one way. And that is why I'm more and more confident that Trump will win, because BlackRock, Fidelity, all of these large wealth advisors now, not Vanguard, which is like the number 2, right? But all these people are heavily invested in Bitcoin. And so if your choice is cracking down or less regulatory scrutiny on Bitcoin specifically, being Kamala versus Trump, and BlackRock is on Trump's side, I mean, which way do you think this vote is going to go? So anyway, okay, we'll never get through this if I don't play.
About why Trump is better for Bitcoin or for the crypto community than Harris. It seems like, at least in the short term, maybe that is the case. But why are you confident, or I guess, why aren't you as concerned about the pullback that we could see if Harris is elected?
Look, I think we could see a short-term pullback, but in that case, I think it would be a major buying opportunity. That's right, specifically for Bitcoin. For those altcoins, I think there's more regulatory uncertainty. But Harris has already indicated that we're likely to turn the page, and I think Washington is ready to turn the page on crypto. You see bipartisan support for crypto bills. You see talk about moving on from the SEC. Make no mistake, short term, the rally is higher on crypto if Trump wins, and I think it's more certain we'll get that regulatory clarity for the altcoins. But in either case, I think the direction of travel is upwards. I think we'll be at new all-time highs this year on Bitcoin, and I think 2025 will look even better than 2024.
What more specifically does that look like?
Oh, that's such a brave call. We're going to get all-time highs this year. Okay, it missed all-time high by what, $100 or something yesterday? Of course. I'm wondering if it's going to hit all-time high tomorrow or latest by election.
Look, we're going to six-figure Bitcoin. We're going to $100,000 plus next year. We're working on our price target for what we expect in 2025. We may release that next week. But if you step back and look at it, crypto has moved from the niche to the mainstream. You have Emory University allocating. You have 60% of the largest hedge funds allocating. We've jumped the chasm. We're going mainstream, and that means higher prices.
I agree with that, and I like that little section right there. Very, very bullish for Bitcoin.
When it comes to the biggest challenge, or maybe not the biggest challenge, one of the challenges, one of the overhangs when it comes to crypto is just the uncertainty surrounding it. I think maybe some of the more traditional investors are a bit cautious when it comes to crypto, just given its reputation. What do you think is the biggest misconception?
Well, people get the Bitcoin that they deserve, or at least at the price they deserve. If they think the risk is too high, then don't invest in it. I recommend investing in Bitcoin only as much as you are you understand it. So invest a little, learn, it'll make you dive down the rabbit hole. As you dive down the rabbit hole, you'll get more and more comfortable, more and more certain about this, and you'll invest more and more of your portfolio into Bitcoin, most likely. But just get in a little bit, and then you'll start falling down the rabbit hole. That's what I suggest to people, but I'm not a Bitcoin evangelist. I mean, I don't go out there and tell people, like friends and family, and try to convince them and talk about it around the Thanksgiving dinner table or anything like that. So if they talk to me about it, then if they ask me a question, I'll answer the question, but I'm not like an evangelist, at least in person. But if people do ask me, I always say, do what you're comfortable with, learn about it, and you'll probably want to increase. So that's it.
When it comes to crypto.
Yeah, I still think it's the original misconception that it's a cryptocurrency and people expect you to buy coffee with it. Look, I've never bought a coffee with Bitcoin, and I think it's the most important financial innovation over the last 30 years. But this is just a matter of time. The flip side of that lack of understanding, which is a risk, it drives volatility, is that's also the opportunity. That's why Bitcoin is up 10,000% over the last 10 years, because people have realized what it is and what it means to the world, and it's why I think it's going higher still.
Do you think the institutional involvement here that we've seen through ETFs, that we've seen through funds?
So he restated that idea of currency versus commodity that Lutnick was talking about.
Really obviously pick up over the last several months. Is that pretty much erased this confidence problem that crypto did have, just given what had happened in the past?
Yeah, I think, look, it's moved it from something that people weren't sure would be around, would matter, into something that people are certain will be here. And now the question is it a $2 trillion or a $10 trillion or a $20 trillion asset? So it's sort of...
Why so low, buddy? 20 trillion? Come on, man. We're going for 100 trillion, baby. Oh, I will say one more thing about not using it to buy coffee. Okay, I agree that you won't use on-chain Bitcoin ever to buy coffee. And most people, I mean, there will be maybe one or two people that use on-chain Bitcoin to buy coffee, but almost nobody will. That doesn't mean it can't be used to buy coffee. Okay. You can use the Lightning Network. You can use side chains. You can use centralized third parties. And I know we went through that whole thing about censorship resistance being kind of the base of the Bitcoin circle, but you can still have on-chain Bitcoin that can be transacted without a central party, and then also use Bitcoin with a central party. Okay, so there are trade-offs, and most people are not going to hold Bitcoin. They're not going to hold their own Bitcoin. Not that they aren't going to hold their own keys or that they won't be able to hold their own keys. They simply will not. I mean, if you look at all the amounts of the distribution of cash holdings today, it heavily favors just the top 1% or 10% of the population. Now, those people, yes, those people hold 90%. The top 10% holds, say, 90% of the cash balance, and those people can hold their own keys. Okay, so it's the percentage of total supply of Bitcoin that's held in self-custody. It is not the number of total users that holds Bitcoin in self-custody. Love it or hate it, we cannot have everybody on the planet having self-custody. It doesn't work. There would be way too many UTXOs. You're talking 100 billion minimum UTXOs. Bitcoin really couldn't function. It would take a node 10 minutes to verify one transaction, to search through all of those UTXOs. I don't know how many UTXOs there are right now, but it's, and I think it's in the neighborhood of 100,000. Somebody looked that up and double check me. I think it's around 100,000 to 200,000 UTXOs. But as you so for people that aren't familiar with Bitcoin, the UTXOs are the endpoints of all Bitcoins that are out there. And so your wallet might have a balance of one Bitcoin, but it is coming from a bunch of different transactions. And so all of those endpoints that add up to one Bitcoin, your one Bitcoin might have 20 UTXOs in it. All right. So and that's just one person with one wallet. What if you have two wallets or three wallets? You have a cold storage and you have a hot wallet, or a couple hot wallets, or whatever the case is. So you have all these UTXOs for one person. And when you make a transaction, a node has to go through and check all of those UTXOs and verify the signature. The verification process is relatively fast. That wouldn't be an issue, but scanning through the UTXOs is the issue. And maybe technology has gotten better. Maybe we'll continue to get much better in a short period of time. But scanning through the UTXO set to verify a transaction is a limiting factor on how many people can self-custody. So most people will not, and most people won't have enough to make it financially worth it either, because fees are going to go higher. Say a Bitcoin transaction fee is $20, about what a bank wire is, and transacting on chain is similar conceptually to a bank wire. So the $20 transaction is okay if you're sending $1,000, okay, but if you're sending $20, a $20 fee is not okay. So it's not going to be used like that. You have to have a layer 2, which layer 2 can be Lightning, which is a decentralized layer 2. You can have a federated or a semi-decentralized layer 2, which would be a side chain. And that's my preferred method to scale it. And then you could have centralized third parties, which would be, I have Coinbase as my bank. I have an account with Coinbase. They deal with my UTXOs and my balance, and I just spend from my Coinbase app or whatever. You're still using Bitcoin to buy a coffee. You're just using it through a third party. So that is kind of heretical. I am like an OG Bitcoiner that will say these things out loud, but most OG Bitcoiners won't go down that road because they want to really push the self-custody thing. I am a big fan of self-custody. I'm just saying that it is unrealistic to give everybody 100 UTXOs. It doesn't work like that. So, okay, let's take a look at the comments. Florida Bitcoin is here with us. BTC Moon Guy. 144 people watching, probably mostly on Twitter. I'm live streaming on YouTube, Rumble, Twitter, and Telegram. Jump over. Links to all those are in my pinned tweet. Like, comment, subscribe over on YouTube. Okay, we have a prediction here from Zebra. Says $104,000 by New Year's Day. Let's have our fingers crossed, man. I do think it will be 100,000 by the end of the year. Dex Invictus back with us. Tomek says, we're going up forever. Yes, the Bitcoiner argument there is that with a fixed supply, so say in a gold standard, you have yearly new flows, right? There's always new Bitcoin mined, new gold mined every year. And so let's say the global growth rate is 2 or 3%. You're going to have the supply of gold. The incentive is to be mining about that much every year, say 2%. So global growth is 2%, and there's 2% more gold every year. So the gold value, the gold purchasing power is going to be roughly the same, stay roughly the same. But if you have an asset like Bitcoin that can't be mined more, there's only going to be 21 million ever, but you have the global growth at say 2 to 5%. So Bitcoin, even when it's fully adopted, the base case is for Bitcoin to go up by the growth rate of the global economy. And so that would be a risk-free rate. So say the growth of the global economy is 2% a year, Bitcoin will go up 2% a year. That means all bonds must, if we're talking about 1 year or longer maturities, must start at 2%. Bitcoin is the 2% rate of appreciation is the risk-free rate. So that is why people say in Bitcoin, we go up forever. Okay, we got some election stuff. Tomek, I kind of agree with you about the election, but right now the early voting is looking really bad. And that's where most of the mail-in stuff happens and that kind of funny business. So it's looking good so far. Yegro, that's how I'm going to pronounce it. Type it out how to pronounce your name. On-chain seems silly for such small transfers. Yes, I agree. I would really like Lightning. I support Lightning Network, but it just hasn't been growing. It hasn't been catching on. And I don't want to force something, right? I think that side chains make a whole lot of sense, especially to those jurisdictional authorities. They will run their own side chain, and you will be able to do atomic swaps between side chains and side chain to side chain, on chain to side chain, et cetera, et cetera. Okay. And they will compete on how easy it is, how the rules of their side chain. And so there will be a China side chain and a US side chain. Which one do you want to be on for using Bitcoin? I like that. I like that idea. Do I use sidechains now? No, I do not. Of course, Liquid is really cool. I wouldn't be against owning and using Liquid if there was more stuff available on it, but it's similar to Lightning Network. It's just not used very much. Tether, I think, is going to be gaining traction on Liquid, and they have all sorts of different ways to issue stocks or shares on Lightning and assets and stuff like that. And what I like about that versus what I don't like about altcoins is that it uses a native token of Bitcoin. So one of the the big giveaways for why something is a scam is if it has its own token. And if you can launch something on a Bitcoin layer 2 that is not necessarily a new native token that is for pumpamentals and all that stuff, then yeah, I'm more in favor of those projects. I think Blockstream has some sort of convertible notes or some sort of debt instruments that they've launched on there. So there is interesting stuff happening on Liquid, but I'm not using it. Yeah, I do like the prediction. I do have an Aqua wallet, but never used it. I'm not a person that spends Bitcoin. I recommend people don't spend Bitcoin. That's kind of a controversial thing in the space as well. I do use Lightning. I send for the monthly price forecast competition that we do on the website. So if you become a $5 member on the website, every month for the first like 3-4 days, you can put in a prediction for the end of the month what the price is going to be, and then you can win $20 in sats over Lightning. So I do use Lightning once a month, but that's it. I don't spend my Bitcoin. I've never been I have spent it in the past and I have regretted it. I mean, I remember I bought like a laptop or something off of Amazon through that third party thing back in like 2015, 2016. And like you would put a wish list item out there and someone would buy it with dollars and then you would send them Bitcoin for it. So it was kind of like a triangle trade. And I think I spent like 1.2 Bitcoins on a laptop. But I really regretted it. I regret it now looking back. So I recommend not doing that. No, I do not run a Lightning node. Right now I don't run a Bitcoin node either. I have run lots of Bitcoin nodes in the past, actually way back. So this is, let's see, like 2016, maybe. I did a little project with a friend that I met at the Bitcoin meetup in Omaha, Nebraska. That's where, after the military, I went back to Omaha where I was raised and went to the Bitcoin meetup and met a guy there. And he was kind of a little bit more hardware oriented than I was. And we started like we called it Bitcoin Mini. And it was just like what they're doing now with the plug and play nodes. But we were the first to do that. And I think that was like in 2015 or something. And we sold a handful of them, maybe 100 nodes. So like I've run a lot of Bitcoin nodes in the past. I just not run one right now. Oh yeah, Overstock. Yep. That was one that people used. Yeah, 1.2 Bitcoins, man. What a mistake. It might not have been that much. Okay. Let's see, 2015. Let's just say it was 2015. And Bitcoin was about $200, maybe. Maybe it was $500 at that time. I don't know. That would matter because I only buy cheap Windows laptops. So that would be like, it was about a 1 Bitcoin. Yeah. Coinbase as a Lightning custodian? No. There's better options out there, like Wallet of Satoshi. That's a centralized Lightning. Strike. I mean, Strike's really good. So they're all centralized custodians that you can use Lightning with if you're not running your own node. What's the node stuff? Is it BTC Pay server? Yeah, that's pretty easy to run. So you can do it yourself. So that actually would be, Bitcoin has so many opportunities in the future with like high school classes or like little educational seminars where you put your kids into it at say 12 years old or 14 years old and they download and run a Bitcoin node or a Lightning node, or they transact in Liquid, something like that. I mean, that's a really cool thing. And hopefully that becomes part of education in the future. financial education just is not that big of a deal right now. It hasn't been. Even back when I was in grade school and high school and stuff, I mean, financial education is really, really lacking in the United States and probably most places. But hopefully that changes. Anyways, okay, let's go on to the next topic. And I was just going to talk really quickly about GDP. So, third quarter GDP came out this morning, and it disappointed. So it was slightly under where it was supposed to be. Let's just really quickly read through this Zero Hedge article. Just moments after ADP published a laughably slanted private payrolls report, according to which the U.S. labor force grew by 233,000 in October, even though we are still in October. Okay, so the payrolls thing, there's been a lot of back and forth about this because they have these autocorrects within their formulas, not just seasonally adjusted, but actually like auto fill-ins. So they start from, say, January with a number, and this number is auto-generated every month. And that auto-generation is off, most likely. And that is because it could be nefarious, okay? It could be intentional, but it also could be just a simple fact that our economy is changing. And so what inputs worked for back-tested data don't work for current data. I hope that makes sense. But really the payroll stuff, I don't really watch it all that closely because of all these problems with it. Now, if there is a trend, so if the payrolls are really high and growing or really low and falling or whatever the case is, that would be more important than the actual absolute number, in my opinion. But there is a lot of people that watch that. Okay, back to GDP. So that was a 6 standard deviation in the payrolls. Moments ago, the Biden Bureau of Economic Analysis came out with its own surprise when it reported its first assessment of Q3 GDP that the U.S. economy grew at a 2.8% rate, down from a 3% rate in Q2. So what they mean by first assessment, these usually come, so these are quarterly, right? So they'll be first, second, and third. They'll get a third assessment out by the end of the next quarter. And the reason why they do that is because they're consistently refining, getting new data or whatever the case is. And so it'll bounce around, but usually it doesn't bounce around all that much. So if it comes in at 2.8, maybe it moves down to 2.6 at the most, but 2.8 is roughly where it is. But again, this is slowing down. It is not going higher. And to get increased inflation, we need to have this actually going up. All right. So that is that. And if you look back here, the last Q3 in 2023, that was really high, above 4%. Looks like about 4.2%. That is the one we're comparing against. So year over year, this is a big drop of over 1.5% in GDP. So very interesting. And if it gets corrected, it will go down even more. And below the 2.9 median estimate, okay, the first miss since Q3 of 2023. As the BEA notes, the increase in the third quarter primarily reflected increases in consumer spending, exports, and federal government spending. Imports, which are a subtraction in the calculation of GDP, increased. So you can see, let's go into this. These are the different parts. Consumer spending was a big positive. Exports were a big positive. Imports were a big negative because obviously exports minus imports is what's added to the GDP in the end. Federal government spending was over 0.5%, but really quite flat, quite uninteresting here. Okay, so that was that one. Let's go and see what one of the guys I follow, David Rosenberg, what he said about this GDP print. He said, the truth behind the Q3 GDP data, half of the growth came from the savings rate drawdown. Okay, so people are spending savings, which is not good if you're talking about a healthy economy. You want either savings to be increasing or staying relatively flat, but this is a savings drawdown. And since GDP measures spending, another problem is with GDP is that government spending is measured the same as private spending, but it should have a discount. Stand by. All right, I'm back. All right, let's get through this here. Real disposable income growth weakened sharply to a mere 1.6% annual rate. Then adjust for the pre-Boeing strike effect on transportation equipment and the government support, and stripped bare, the economy really only expanded 0.5% in the third quarter. Miracle or mirage? So yeah, if you take out a bunch of these things, these are kind of subjective, right? I would just pinpoint, like, you need to put a discount onto government spending. Eventually, like, because it's so much less productive than private sector spending. So really, I don't know. We've toyed here on the show before with making a 15% discount on all government spending. So if we go back to this image here, this government spending would be drawn down. I would even say 50% discount. So that would make it a big difference on the overall GDP for these people. But anyway, let me check comments, and I'm going to share bitcoinandmarkets.com while we just get into the comments, and then we're going to wrap it up here for the day. All right, so let me check Telegram. I haven't checked there yet today. Okay, point, bringing it back to price. Okay, great. Let's do that. Saying, talking about the inflows for the ETS might be negative today. That will be interesting to see. Huge day for inflows yesterday. And let's actually just go right there. So you can see $870 million in one day. That's not the top. This actually has the maximum listed here, and the maximum is over 1 billion. So, but very big day. And look at these last 5 days have all been significant days. The average right here, $115 million a day. I remember when this launched, okay? And all of the kind of pundits like Balkunis and Seifert and Galaxy, what's it called? Galaxy Digital, whatever. They were saying 10 to 20 billion dollars of inflows in the first year. And I was like, okay, well, that would be, you would need like 40, I think it was $40 million a day. $40 million a day to get to 20 billion. And we're at $115 million per day coming into the Bitcoin ETFs. And we're almost at 23.5 billion already. So just way outperforming all expectations on these inflows. Okay, back to sorry guys, I still have this stuffy nose and my cold and cough. But okay, here is the Bitcoin chart. You can see election coming up. I did talk about this yesterday on the premium post. I was saying that the 1 hour and the 4 hour were oversold. And you can see the 1 hour did have a bearish divergence and has been consolidating all the way back down to that 50 mark on the RSI. So that is fully reset. 4 hour fully reset down into neutral territory, hit 69 on the 4 hour. So that one is fairly reset as well, ready to go higher. But on the daily, we have plenty of room to go higher before it is oversold. Remember, the daily on Bitcoin in big rallies can get to 90, even 93, 94. That would be extremely high, and I'd be very cautious at that point. But sitting at 70 means we have a lot of room to go higher. So that is Bitcoin on the day. So I continue to expect a break an all-time high very soon before election day. And then if we zoom out like BTC to the moon was talking about. If we zoom out to the end of the year, where will that be? Let's put a vertical line there, roughly there. So, 100K by that time, it would not be anything. If we zoom out to the weekly and we just go like that, I mean, 100K does not look that far off. So let's just put this up here, set this coordinate at 100. That looks totally doable by the end of the year, especially if we look at the way that last election halving and then election worked out. 100K does not look very far away at all for the Bitcoin price. Okay, that is it. Maybe we'll take a look at some macro charts on the next one on Friday. But let me go back to bitcoinandmarkets.com. Share that tab, and I will look one more time at comments, and then we're going to jump out for the day. Okay, here we go. If Trump wins, Bitcoin might pump really hard. Yep, I agree. The more it looks like he's going to win, the more it's been pumping. But it's Bitcoin cycle, okay? Bitcoin is in the 4-year cycle. It's really unaffected. Like last time when Biden won, I would say that was negative for Bitcoin type interest, and Bitcoin did just fine after that election. It's all about the cycle. It's all about uncertainty, and that's it. All right, you're welcome, guys. Let me check Telegram one more time. Nothing new there. All right, guys. Well, I am going to head out. Hope you guys had a good day today. Wednesday, hump day, going into Bitcoin all-time high very soon. So thanks for joining me, and I'll see you on the next one. Bye.